Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1148, and today's date is November 30th, 2016, and the title of the episode is Exposing the Hoax That If the Stock Market Rises, the Economy is Doing Well. Now, before I get started, I just want to make an announcement. I uploaded an interview with Andrew Hoffman on the X22 Report Spotlight YouTube channel. So if you go over to YouTube and you type in X22 Report Spotlight, it will bring you to that interview. Or you can come over to the x22report.com site. All you got to do is scroll down a little bit, look over to your right-hand side, you'll see the interview there. Or you can go to newssentinel.com. Same thing, scroll down a little bit, look over to your right-hand side, and you can play the interview there. Let's get into the economic collapse financial news. Well, we can see around the world right now that many countries, many areas are in trouble. Yes, they're being completely manipulated to make it look like everything is fine. The European Union is telling everyone that everything is fine. It's all improving. Unemployment is incredible at 10.1%. where it fluctuates between 10.3, 10.2, 10.1. It's never really gone lower than that. And they're out there continually telling everyone that everything is fine. Actually, going back to 2013, France was telling its people that they're coming out of the recession. That never happened. Greece, their unemployment is 25% plus, but they're telling us that everything is fine there. In Australia, we can see they're starting to have problems. We know there's a war on cash going on in Australia. But we also see that their real estate market, well, it's starting to collapse. In September, they had a 9.3% plunge month on month. And they were hoping that October that they would see this incredible bounce. Expectations were for a 2% gain. However, it didn't happen. Building approvals collapsed by 12.6% month on month, and a shocking 24.9% year over year. And this is not the only country where we're going to see real estate implode. We're seeing many, many bubbles around Europe, Australia, Canada, and especially the United States. And these bubbles will pop because the central banks, they can only keep this illusion going for a certain period of time, because as we continually move down the road here, what happens is they're very nervous about black swan events, and the likelihood that this would happen gets greater and greater. But we can see through manipulation and through statistical manipulation, what they're doing is they're trying to convince everyone that the economy here in the United States is doing better than it has ever done before. Now, this is all part of their plan. They want everyone to believe that as Obama leaves office, the economy has completely recovered. It's a fine-tuned economy. Everyone has a job. Manufacturing's incredible. Retail is doing great. The holiday season's going perfectly. Actually, none of it's true, but this is what they're trying to convince everyone of. And what we're seeing is ADP is coming up with their numbers. And in October, they had a disappointment of 147,000 jobs. But through revisions and through manipulation, they were able to push this up to 216,000. Because what they did was, they did a downward revision in October to 119, moved those numbers to November, and all of a sudden, they had an incredible job number. But we see manufacturing, well, those good producing jobs, well, they dropped by 11,000. Where were the gains? Once again, the service sector. And we can see right now that the service sector, those jobs, they keep adding. Even though retail is declining, stores are closing, restaurant traffic is declining through the Restaurant Performance Index. Restaurants are closing. They're continually telling us that there's all these service jobs. Well, we can tell you right now that those are manipulated and they're just making them up at this point. We see total household debt rose to $63 billion in the quarter to $12.35 trillion, driven by a $32 billion increase in auto loans. Remember, the system is run on debt. The central bankers continually need to spread their debt. If they don't, the system collapses. And we can see right now that the auto loans, well, they hit a record high of 1.14 trillion, and 3.6% of those auto loans, well, they are delinquent. The 90-plus day delinquency rate for auto finance company loans worsened by a full percentage point over the last 4 quarters. So the data suggests that we're seeing a deterioration in the performance of subprime auto loans, and this translates into a large number of households with roughly 6 million individuals at least 90 days late on their auto loan payments. Sounds like a incredible economy right now. And we have to remember the number of people that have lost their jobs, the number of people who can't find a job, and the number of people who have taken these service jobs, as they keep telling us. We see pending home sales rose about 0.2% year on year in October, among the weakest of the year. Now, this is made more troublesome since these sales occurred before the election, before the mortgage rates exploded higher, before mortgage applications collapsed. So what we're going to see next month is pending home sales, new home sales, existing home sales. Well, they're going to implode because we can see that mortgage refinancing, well, it collapsed to 2016 lows as rates moved up to 4%. Mortgage applications tumbled by 9.4%. And we can see right now refinancing, well, it crashed by 16%. And this is what happens when the interest rates move up a little bit. And you can see, and there is evidence right here, that if interest rates return to, let's just say 5%, 6%, this entire system is done. It cannot sustain itself. Look what happens when it moves up to 4%. And can you imagine if it went to 7%? The whole thing would implode in a split second. This is the reason why they're keeping interest rates very low. Europe is negative. Japan is negative because they understand that the system cannot be sustained at all. And since we've had all these years of negative real interest rates, who really benefited from this? Well, it was the bailed out banks, government bodies via property tax hikes, income tax hikes, sales tax hikes, asset holders, the wealthy. The median guy, well, that guy lost. Those at the bottom end got clobbered. Only the top 10% or so fared well. The primary beneficiary of QE, well, was the top 1%. What they were doing is they were extracting the wealth from everyone. That's what this was all about. And yesterday we talked about how they had these test cases in Cyprus, how they had it in Greece, and now India, where they're stealing the wealth from the people. And these were all test cases because what they're going to do is they're going to expand this out to the rest of the private Western Central Bank countries when the time is right. And that's why they have the bail-in documents. I mean, we've been talking about this for a very long time. But remember, they don't create the bail-in documents one month and use them the next month. They test them. They make sure they're working. They want to see how the people react. Well, the tests are done. They're ready to use them. And here we are today. Now, there's a young senator out there from Oklahoma, James Lankford, and he released a publication detailing 100 examples of government waste entitled Federal Fumbles, 100 Ways the Government Dropped the Ball. And he's pointing out how much money the government wastes on ridiculous things. Like NIH funded a $2 million multi-year study about how kids don't like to eat food that's been sneezed on. So that's where our money is going, to that type of study. The NSF funded multiple grants totaling nearly $500,000 to find the connection between religion, politics, cemeteries in the 12th century Iceland. In the last year, NSF gave almost $200,000 to the study of 500-year-old fish bones in Tanzania City to determine the connection between food and social status. And the list goes on with $1 million, $500,000. And when you add it all up, it's a couple of $100 million that they spent on these ridiculous programs, where they could be using this for maybe the veterans who risk their lives every single day, helping people eat. I mean, this is just a waste of money at this point. Now, the corporate media, the U.S. government, they're out there, and of course they're all pointing to the stock market. And we know when we go back in time, all the way back to 1929, moving forward in the 70s and 2001, moving to 2008, each time the stock market hit all-time highs before the entire system came down. Today we're at 19,000 points, and it has hit an all-time high. And everyone believes that when the stock markets are doing well, the economy is doing well. Well, we know this is not true because we've been tracking the economy. We know that the economy right now is in a recession, moving into a depression, because a lot of the indicators that we've looked at are equal to or worse than 2008. And a lot of them are flashing, depression, depression, depression. But we can look at other countries to see, does this really hold true? Is this a hoax? Well, if we look at Zimbabwe, well, their stock market is doing well. It is up there. But the country is not doing well. Venezuela, their stock market is doing incredible. But guess what? Their economy is not. People are struggling. Here, the United States, the stock market is up there. Of course, most of this is manipulation. That's the first sign that the stock market is not an indicator of the economy. But when we look at different countries and we see what's going on with our own eyes and what's happening in the stock market, we can say, well, wait a minute. If the stock market is doing well, how's the economy not doing well? Because, well, the two aren't connected really. Governments, central banks, they use the stock market to convince the people that everything is okay. We've been brainwashed into thinking this. Because look in the past of the United States. If we look at 1929, the stock market at that time was at 400 points. But when you looked at the economy was falling apart. There were food lines. People had no work. It was awful. And then the stock market crashed. The stock market is the last indicator that, yes, everything just fell apart. It's the indicator that the government uses to say, okay, something just went wrong. Or we brought the economy down, but they don't say that. And right now, we're seeing the stock market pushed up to all-time highs like we've never seen before. And we're looking at the economy, the indicators, and we can see right now we're at a point that we've seen in the past, which shows us that we're going to have major, major problems. Now, it looks like OPEC might have come up with a deal to cut production. And we can see that the deal is that they're going to be cutting about 1.2 million barrels of oil. This is going to be effective on January of 2017. And the duration is going to be about 6 months. They'll extend another 6 months to see how things are going. And during this period of time, we can see that we might see oil prices start to rise, because when they started to push out a lot more oil than the world needed, we saw prices drop. And of course, this was meant to put a lot of pressure on Russia, They were hoping that with this extra money, people were going to go out and purchase goods. But here they are now cutting production, which means oil prices are going to rise, which means people are going to have to shell out more money for gas, which means product prices are going to rise. And what we're going to see is the entire economy implode. It looks like they are setting everything up perfectly. All we need is the Fed to raise rates because we have a cut in production, interest rates rising. We have the complete illusion from the statistical numbers that the central bank and the U.S. government have been throwing at us. Everything has been set up for this economy to come tumbling down and crash during most likely the term of President Trump. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.